please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Straight to the news just coming in, the government has hit 86.5% of its full year target in just the first 4 months. Lata Venkatesh is here with more detail. Lata, is this a concern? What does the data tell you?
Hitting 5.4 lakh crore, that is 85% of the total deficit, is not a very serious red alert, simply because last year, same time, we were 92% of our full year estimate. But what is concerning is the manner in which it has increased. Only in the month of July, the deficit has increased by 1.1 lakh crore. Last July, it had increased by only 63,000 crore. So July, we've been quite a bit indiscriminate, it looks like. Let us look at the other important number, total tax revenue, that's risen by 10%. The target for the full year, actually, if you have to meet, you have to rise by 16%. But then you often expect that economic activity will pick up in the second half, not in the monsoon months. Spending, again, has risen by about 10%. That was also how it was in the last April to July period. Nothing wrong with that. But let me just come back to the revenues for a bit and put it along with the GST revenues that are being spoken about. Our colleague Timsy had spoken about the August revenues, GST revenues being as low as 93,000 crores. It's now getting confirmed from other places as well. The July revenues are also been upped, but not by a great deal. It is 96,000 crores. Remember, the asking rate is 1.1 lakh crore. So with each passing month, we are a distance away from the extent to which we ought to have collected. So the fear is that normally we start with a high deficit because spending happens in the beginning and a lot of the advance taxes are paid much later, especially in the second, in the third and the fourth quarter. This time, the big fear is that indirect taxes will let you down. At least so far they have.
All right, Lata, but stay with us. Let's take a look at Mint Street, where the Indian rupee continues its downward slide. The currency today hit a record low of about 71 against the US dollar for the first time. So, Lata, again, put this into perspective. Rupee continues to be under pressure.
Well, today, you know, it's not panic mode yet. I mean, the point is it's been a gentle slide. What is the slide today? About 0.15%. Or to 0.2%. It doesn't, it's per se not a very, 0.25%. Per se not a very, very big fall. It is just that number 71 that perhaps draws a lot of attention. But the reasons are the same. The global markets today started off in a bad mood. Equity markets, risk markets were all over because of the US-China trade issues. Asia was down, Wall Street was down, Indian markets also exposed that, showed that. And in the currency markets overnight, the peso had a very bad fall. Argentina had to increase interest rates by 60% to stem the fall. The lira, all of them showed their own, vulnerabilities. And the unfortunate part is we are not as bad, anywhere as bad as those currencies, peso, lira, rand. But after you count those first four fragile ones, we come. That is the only thing that disturbs a bit. There was dollar purchases by importers and equity hedgers. I really want to reiterate that I wouldn't panic at all at this juncture. It looks like the Reserve Bank has supplied at 71 and therefore it has kept the currency, just within that level. It's not really all that risky for the markets at all, so long as it doesn't encourage, that it's an easy shot. The rupee is an easy shot. So long as that psyche has not set in, I think, we are only going to benefit by the depreciation. But the point is, can the central bank, can the government, control the slide and say it's a restrained slide, it's not a psychologically panicky slide.
All right, Lata, thanks for joining in with that. That's a good note to end on. There is absolutely no reason to panic at this point in time. But let's